Okay, very good morning. Monday the 4th of June. Hope everyone enjoyed the sunny weekend. But just getting straight into the thick of things and really discussing not just today but the week ahead. And we're off to a moderate risk on open following a relatively positive Asia Pacific session. This of course comes on the back of a higher close that we had at the end of trade on Wall Street last week, where we had non-farm payrolls generally a positive report, and that kind of seeping through into the sentiment overnight in the Asia Pac session. So this morning you've had a slight move higher in the opening part of futures trade in European stock indices, but some of the steam has been taken out of that, but we still sit in positive territory. Likewise then slightly higher for the US index futures, holding on to obviously the bulk of the gain that was seen on Friday. And really after payrolls, if you look at the S&P performance, it kind of really did just grind the session out all the way higher up till pretty much the consolidation of the last couple of hours before people probably just very much called it a day from that point of view for the weekend in store. But elsewhere, the positive move in equities means fixed income futures lower. So you've got the US 10-year down about 7 ticks at the moment. Quite close proximity actually to retesting where we're sitting at the moment, around the initial spike low on the back of the actual timing of the payroll release on Friday. So trading around the 119.2019 mark at the moment, and Bund futures also down about 30 ticks. In the currency market, a little bit of dollar weakness. We're going to talk a little bit about the week ahead and the focus on the G7 summit happening at the end of the week, and there's going to be an obvious turn back towards close monitoring of the potential trade war situation. That's probably going to be one of the most dominant themes, particularly to look out for on the news side of things as we get into the second half of the week. But the dollar index is down about 1/3%, and so both major pairs seen on the front foot. A little bit of outperformance in the euro, in fact. We're up around 44.5 pips at the moment, just above the 117 handle. So having a quick run through some of the headlines. This is starting off just to cover off the European story, because it seems like comparative to what we had pretty much a week ago, really. If you remember, it was Tuesday after the long weekend, the bank holiday, that we had this complete breakdown in nervousness over the Italian situation after Mattarella rejected that more Eurosceptic finance minister that had initially been proposed by the Five Star and the League. However, what a difference a week makes. Here we are, generally Italian assets recovering for the time being. The latest here to look out for on the schedule ahead is really Tuesday and Wednesday, because there's going to be a confidence vote in both houses of Parliament. So this is Italy's new populist government preparing for the final kind of hurdle before it sets out about trying to overhaul European Union rules and establish an order. A couple of things here to be aware of, though. This parliamentary approval is being sought after by Giuseppe Conte, who's the new appointed kind of Prime Minister. So a few minor points to be aware of that might see this situation continue to flare up is that the anti-establishment Five Star movement and anti-immigrant league currently hold a majority in both houses, although in the 320-seat Senate, the two groups only have 14 votes more than the opposition. So it's by no means a slam dunk. And actually, just seeing an interesting tweet here, I might as well bring it up while I'm on here. Let me see if I can just alter my screens for 1 second, and I'll show you what I'm seeing. This is a really good chap actually to follow while we're on the subject, to plug into your Twitter feeds if you don't already follow him. He's a journalist from one of the main German newspapers, but does tweet good statistics and good charts. And here's a tweet he's just done, looking at the 2-year risk spread over Germany plunging to 140 basis points. So yeah, just looking at the fact how the market's moved on, you can see this was the spike that we had in the spread as that 2-year yield shot higher about 6-7 days ago, and it's pulled back substantially. So over 2/3 of that move, the spread kind of recovered, so retightened in that sense. However, as his tweet And as we just discussed, a slim Senate majority makes this and future votes quite risky. So this is the other thing, is even if they get their government in place, don't forget that any subsequent law change that comes forward or decision making, in fact, means that they've only got that very slim lead, which doesn't detract from the point that it still could be quite messy in Italian politics for the foreseeable future. But for the moment, there is some relative calm. On the Spanish side, just saw a headline. So Sanchez, as we saw those developments from that change of guard and the vote of no confidence in Rajoy at the end of last week. So Sanchez is to have a cabinet ready in 2 to 3 days, according to some officials being reported on Bloomberg this morning. So that's another thing to just keep up on your agenda. Quick look at the euro and where things are sitting at the moment. And I guess in the near-term price movement, it's kind of really putting into perspective last week's range. Obviously, we're coming quite close proximity, just looking at a trend line from, I guess, what would have been last Thursday, where we are at the moment. It's kind of around that R1 price point. Anything above there, be looking then for a push back in toward, I guess, proximity of the high print back on the 28th. And that kind of encapsulating then the low point back as well from the 21st. So maybe an ideal point to keep an eye on. If we can get our heads above this R1 and this kind of these highs at the beginning, a little bit lower over the last kind of 2-3 sessions. That's kind of an area I'd look at before any more sustainable move higher. Economic data in general, we'll look at the weekly calendar ahead. It is relatively quiet, so I'd say European politics, maybe you still need to have your finger kind of on the pulse, possibly, but I'd say a lot of the sting in market movement has been taken out now, just given the relative state of play, and we've moved on a little bit now in Italy. On that point, the pound has been relatively quiet, in fact. There are a couple of data points to look out for on the FX market for the pound as the week goes on. Today, you've got some more of the PMIs coming out. I think it's the construction. You're going to get the service figure, which obviously is quite key for the UK. One thing bearing in mind, I think we probably will get a bit of a bounce. I think the positive weather might lend its hand for some good readings for that. I think what the month of May was the best, or the hottest May on record, wasn't it, from a weather perspective? And certainly hot weather does typically make the UK consumers spend more, whether on food or other items. Certainly a far cry from the beast from the east conditions, which did impinge the service sector earlier in the year. Just looking at cable here, on a slightly longer time frame, and obviously it seems like we've got out of this phase now of that really aggressive repricing of sterling that we had really all the way up till last week, where we've seen a bit of a bounce. And we've looked at this 133 handle before. It has had relative significance if we look at the course of 2017 from a resistance and a support point of view. And although it did get about 50 pips below there at its low point, again, it's been an area of which I think a lot of people are looking at. From a Brexit point of view, I mean, talking about the weekend's news, there's nothing really new to update you on. I think, as is the focus of financial markets, which is fairly blinkered at times, we still seem to be focused on the European narrative from the political side, and then also we've got this trade talk. So again, I think Brexit could take a bit of a back seat overall, unless there's some unscheduled type of news that breaks or a disruption to kind of Theresa May and the cabinet. I kind of think Brexit might take a bit of a sideline for the rest of this week. Any recovery in the pound, the kind of areas, well, as I say, on the kind of upside, be looking really up a push towards anything towards that 135 handle. We're about a point or so shy of that at the moment. And then on the downside, really around that 133 to 132, that kind of area there. So that's the kind of weekly range I'd be looking at from a high and low perspective to carry more significance. So we're in a little bit mid-range of that at the moment. Moving on though, and as I said briefly when we just got this briefing underway. The main point for this week, I think, is much more to do with the trade tensions. So the thing we're looking at here is President Trump is heading for a bit of a showdown with American allies as the G7 summit in Quebec takes place at the end of the week. This, I think, begins on Friday, but it carries over and spills into the weekend. And this obviously comes after this idea that, given the state of play, whether the EU and Canada, their threats of retaliatory measures unless Trump reverses course on those new steel and aluminium levies. Meanwhile, China, they're also warning it will withdraw commitments it made on trade if the president carries out a separate threat to impose tariffs on the Asian country. So I guess one of the risks here, and I think what could be a defining factor as we continue to go through the week, is whether or not we get a kind of, is this purely a usual negotiation approach from Trump, and he's gone into this meeting quite heavy-handed, only then to kind of step back from that to make a kind of olive branch, and more concessions are made and talks progress? Or does he keep this stance through the G7? I mean, just imagine rocking up at the G7 if you're Trump and everyone is against you. Would that faze a guy like him? Probably not. But let's see, you know, is this the usual kind of, I guess, state of play where Trump just wants to control the narrative, if you like, into the trade discussion? So I think, just going off historical precedents, he might hold the line all the way up to the meeting, and then it could be very late on Friday when you get a bit of a flash headline and a change in sentiment, whether positive or negative. I think you've got to prepare for both scenarios. But just having a look at the S&P, where we trade at the moment, found a little bit of support in the overnight kind of late Asia Pacific session around what was the eventual high point that we had post payrolls. From this is with a high that we printed before we kind of steadied out into the close on Wall Street. So a little bit of support found overnight. Be looking at that 36 3/4 level as the US come in later. Any move beyond or below that, then obviously just looking down at this 27.29, the kind of Friday range low, and the overnight Asia Pac low from when we reopened, which was also the high points that we saw back on the 30th. And the 31st, so kind of that point there and there as potential support points on any pullback from the extended move that we had on Friday. From a daily continuation chart, as I say, the trade talks could be quite pivotal to whether or not what has been a kind of period of consolidation, I guess, for the S&P. You can see the trade dynamic, if you like, has created all kinds of points of volatility. This was kind of when the inflation, this period, that was when we had the meaningful pickup in wages, and that sparked a movement in yields, and then the subsequent break of the 3% in the US 10-year yield as people were repricing that in. I'd say the payroll data on Friday really doesn't change the situation for me. It just means that the Fed are going to continue on track. They're going to hike rates in a few weeks' time. And one thing to be aware of on the calendar for this week is that quite light on Fed speakers, if any at all, actually, because we go into the blackout period now ahead of their meeting to come. So the kind of stage has been set. They're going to hike, as far as I'm concerned, in June, and I don't think that they're going to really severely alter the language too much. I don't think the payrolls data was good enough for them to be giving a nod to 4 hikes. So just continuing on with just 2 more to deliver for this year. But so really the areas here are, we're right at the top of that range that you can see we've been in since mid-May. Do we make a break above that? And if so, then a concerted push back up to that 2800 handle. You can see that's roughly where we got up to back at the beginning of March. Or does it fail to break this top side from mid-May, and we push back down to the lower bound, which is really the 2700 handle? So again, this is all going to be, I think, dependent on whether or not these trade talks play out in a positive fashion or not. If we come in the G7 and there's some nervousness and leaks and sources coming out that Trump's not going to back down, then we could see a bit of a reversal from the recent gains that we've seen. Okay, a few other headlines to have a look at. You might have read the papers, a few M&A stories during the rounds, and some positive read across for a couple of the bank stocks. UniCredit shares up about 4% in Italy this morning. Italy's UniCredit is plotting to merge with French rival SocGen in a bold move that would see two of Europe's biggest banks join forces, leading the way for an unexpected round of banking mergers on the continent. That's what the FT is reporting this morning. The other company you may have heard being talked about a little bit this morning, it did open up about 6% in the shares of Air France. They're pretty small, but just from a single stock perspective, so you're up to speed with the news. Accor Hotels saying at the weekend they could possibly be buying a stake in Air France, which the French government has a 14% or so holding, and their shares have reacted positively this morning. One of the other stories to be aware of is OPEC, and I point out OPEC because we're getting close. It's June 22nd when the official Vienna OPEC meeting is due to take place, and as you've probably already gathered, we're getting a real pickup in the number of OPEC related comments, and for any of those new traders, what you can expect is that this is only going to intensify over the weeks ahead. This is quite common practice. If I was going to plot a chart of OPEC commentary ahead of a meeting, it generally ramps up into the meeting because they very much telegraph their discussions and decisions well ahead of time. It's slightly different in regards to a central bank, which is very guarded and cautious and very much a strategic planning of their communication. OPEC is a bit of a scattergun approach because of the fractured nature of the members that are involved. But what a lot of the weekend's commentary was saying about OPEC was about how OPEC's worst meeting ever, part 2, might materialize again, and they're looking at we might get a repeat of what happened in 2011. Because if you remember, with OPEC, only about 3 or 4 weeks ago, we were talking about it's pretty much priced in. We were going to have an extension of the existing cuts. Hence, if we look at where oil was trading, I mean, if I just quickly flash it back to a weekly chart, here where we were, we kind of went through 70 with ease, got all the way up to a $72 handle, and then we've had this kind of short-term correction of about kind of $5 or so to where we are at the moment, and we're quite still tight key around the 66 level, which was where we originally found some resistance back at the beginning of the year before the eventual breach. But how this has changed is that given the kind of political unrest in Venezuela that severely impacted their ability to produce crude, this expected sanctioning on Iran, which is going to potentially take 1 million or so barrels off the third largest producer within OPEC. This has then led to this turnabout or roundabout turn from Saudi Arabia in particular, and this is where this conversation comes from, is that the Saudi about face on production lays the ground for discord in Vienna, and this is because Saudi now want to increase production to make up for that shortfall that's being seen elsewhere, i.e. in Venezuela and in Iran. And so he's now got to get everyone else on side that that's the right decision to do, which ultimately might be quite a difficult thing to discuss with some of these lower members who are fiscally still struggling with the current price, and obviously they want a price higher, and oversupplying the nature would kind of be counter from a logic point of view to achieving that. One thing history tells us, though, very much so with these OPEC meetings, is that really what Saudi wants, and certainly what Russia wants, Russia get. So really they're the two key playmakers, I'd say, to this situation that you need to be looking and mindful for with any communication that comes out in the coming weeks ahead. So that's the kind of OPEC situation. Looking at the calendar, though, for today, just to get you up to speed with the kind of ebb and flow of today's session. You've got UK construction PMI coming out at 9:30, but I don't really think that's going to have too much of a sway on the pound. It's really tomorrow with the service one that's going to be more influential for the price of the local currency. Otherwise, today is relatively quiet. Factory orders coming out of the US later on this afternoon at 3 p.m. This will be alongside the revisions for durable goods. A couple of speakers, but the only real notable one is not until kind of later this evening. Bank of England's Tenreiro She's speaking in Guildford, text to be released. So possibly worth keeping an eye on for any of the guys in the training live room if you're still in the market later on this evening. Looking at the week ahead, so this is Tuesday. It starts to heat up a little bit for any of the FX traders overnight. You do have the RBA interest rate decision tomorrow night. But as I said, you've got the UK service PMI coming on Tuesday. This will be alongside the various releases as well coming out of the Eurozone and China overnight on the service side. Otherwise, it is pretty quiet, as you can see, from a data perspective. So really, I'd be looking for the trade talk to drive probably market sentiment, with a little side order of Italian and Spanish politics just to keep half an eye on as well. In terms of the broader energy outlook, this is something for any energy traders. I'll post it in the chat room as a calendar of events forthcoming that might be quite useful. This is just kind of looking at June as a whole, which kind of is bookmarked by the fact that you've got the Vienna OPEC meeting happening right at the end, which is the 22nd. So a couple of releases just to be aware of as we go through. And this week, i.e. starting today and tomorrow, you have the annual EIA government conference. So it may be worth just keeping an eye out for any kind of supply and demand forecasts that come out of the EIA. And then from a geopolitical point of view, Raul in stage 1, thank you very much for sending this through to me. This is a good resource that he's found of geopolitical calendar. I believe that they update this week to week. This has come about because a lot of people often ask me that outside of the economic calendar, given such an influence of geopolitics at the moment, where can I go for a real definitive schedule of geopolitical events? And so this is Stratfor, which is a kind of market intelligence company. They provide analysis for big banks and hedge funds, but they have this report that they put out, which is basically the most significant events planned for the week ahead. So this can be particularly useful if we look through Europe. So obviously this is where we get our timings for the likes of the two chambers vote of confidence on Giuseppe Conte coming out of Italy. So this is going to be tomorrow and Wednesday. And it's quite a good way of keeping on top of different things. So you can see here, June 7th, Shinzo Abe meets with Trump, the head of Trump's upcoming summit with North Korea. Vladimir Putin visits China later on this week. And obviously this all comes ahead of the G7, which is happening at the end of the week. So it can be particularly useful for that. Again, I'll put the link into the chat room. Okay, and that's it. I'm going to leave it at that. I'm going to issue the weekly strategy report as per usual with a bit more insight as to my view on the week ahead. I'll try to issue that at around midday. But any questions, just let me know. Sam is over at Love It Lane, but obviously he can still see the chat. And then Piers and I, as you can see, are here, happy to help any questions you may have. All right, guys, that's it. Have a good day and have a good week ahead. Thanks very much.